Good afternoon, everyone. Today I'm chatting with Ken Armstrong from Westhaven Gold. In today's interview, we get into what type of early stage gold developers might make sense for investors that are looking for that part on the risk curve that's largely been de-risked but still offers a whole bunch of torque. We also get into Westhaven, who recently put out a PEA, of which we did a video on, which you could check out our channel. Ken gives us some additional insights into that PEA and breaks down for us where the company's heading over the near term. All right, everybody, enjoy the interview. Don't miss the Rule Symposium for Natural Resource Investing happening July 7th in Boca Raton. If you can't make it in person, that's not a problem. You can get your ticket to watch live online or on demand. We'll be there with the deep dive, so if you make it out to Boca, come say hi at our booth. If you want to sign up, click on the link in the description to get your pass. Ken, thanks for hopping on here.
Yeah, Steve, thanks for having me. Yeah, it's good to be here.
So often when we start these interviews, we talk about the macro conditions, what excites somebody about gold. You're a geologist, so I assume that you're not going to go all Peter Schiff on us and start breaking down everything that's happening with the Fed and the Bank of Canada and how it indicates that now's the time to buy gold. But I do think that you've probably got some thoughts on the types of projects that have a shot for our audience, which is largely retail investors that like mining stocks. And I'm very proud of the audience we have. The comments we get on our YouTube channel are typically about things that are happening in the mining equity world. They're often very astute comments talking about PEAs or feasibility studies or technical reports. And so now we have a chance to have somebody like you on here that has a background in this stuff. So I'm curious if you're talking to an audience of retail investors that are looking for those torquey mining projects that aren't just some, promo, a piece of moose pasture with a bunch of sketchy promoters, but looking for projects that have a shot of going to production in this mining cycle. For you as a geologist, what are those kind of projects you would be looking for?
Well, I think, yeah, all good preface. Thanks, Steve. And I think, yeah, definitely you're not going to get a detailed analysis from me. I think that the metrics and sort of the overall picture for gold, as we sit sort of middle of 2025 is pretty self-explanatory. When you look at the gold price and where it's been, we see an environment where gold producers will start, and we're starting to see this. They're generating a lot of cash at current prices as they are putting out their quarterlies. We're starting to see that. I think we start to see which of those companies are sort of better run and are taking advantage of this increase in price. And in the increased margins then that they're getting. And then you get to see those producers where those margins aren't maybe where they should be, and operationally they're maybe not going as well as we might have thought. But so we're seeing those producers rewarded in their share price in the markets. That's starting to trickle down to sort of the single asset producers, and London Gold is a fantastic example of that right now. Um, what we haven't yet seen is it trickle down to the junior side, so where Westhaven would sit, and sort of that developer side where you might have a resource. If a company's been able to show that resource is developable, which I think we can do and can show, that those are sort of going to be the next names and the next sort of groupings of companies on the market that should start to see some of the upside, and whether that's through M&A or just sort of overall realization that gold it doesn't, there's not a bunch of supply sitting on the sidelines ready to just get turned on with increase in price. It's always been that way. Historically, gold is very difficult to find. Takes a while to get it into production. There's never been sort of a big production profile that's just sitting on the sidelines waiting for higher prices. It's making some projects that maybe have been around for a while look more interesting. But we think with what we have at Westhaven is actually relatively new and is fresh and is imminently developable. And that's what we're going to be looking at doing and mapping out here now over the next 12 to 18 months.
So it's kind of thought provoking that you talk about how there are some of these companies out there that have these production profiles that are ready to go for a higher gold environment. And one of the things that I think about is in this higher environment, it's easier to raise money. And you're right, we haven't seen it trickle in on the juniors yet, but there's signs there. Every day we go through with our writing staff, the various financings that are happening in the space, and we're back. Make no mistake about it, we're back. How long it lasts, I don't know. We could be back for 3 months. We could be back for 10 years. No idea. But one of the things that I think about when I think about that is that we don't necessarily have the human capital in many of these places to just go and take mines to production. So if you are able to go and raise that capital a lot quicker than you could have ever dreamed of. You now have to go and find people that can actually work at your mine that have expertise. And when you go and you find those people, you're competing against the big names who are also trying to do the exact same thing. How challenging is it going to be to go out there and find quality people to move your project forward if gold continues to run like this?
It's an excellent point and an excellent sort of question and overall sort of thought process that every project needs to go through because talent does get thin. I think within our group, it actually starts with the fact that we have people involved in the company that have done this before and sort of taking projects through discovery, evaluation, development, and into mining, and we have the contacts. Of other people. If we need technical expertise or a subject matter specialist, we can access those people. And big part of that starts with the chair of our company, Ira Thomas. She has done this with Kaminak Gold. She was just operating in Botswana with a diamond company called Lucara Diamond. And we've gone through sort of this management reset where we brought in people who've done it before. So if Zara Bolt, our new CFO, has taken projects through financing and can do that. Robin Hopkins, our new VP Exploration, has done it as well. And then I'm still relatively new in the position, just here over just over a month, barely over a month now, to really try and put together the pathway and the track that we need this project specifically our shovel nose property to be on to get it from, I think we'll end up talking about our PEA. So that's all, PEA is nice. It gives us numbers on economics and has a price tag, but what is the path between where we are now and starting to spend that money on developing the mine? How do we get there and what's involved in getting there? So you do need people to help you with that. And we have the contacts and the internal capabilities to do that.
So let's talk high level then, because we haven't really set it up for our audience about Westhaven Gold. And for anybody in our audience who has an interest in the story, we actually broke down the PEA, I think a couple months ago that you guys recently put out, which is pretty plainly puts out the updated PEA, which is added two satellite deposits and uses more relevant gold pricing than what the previous PEA used.
Yeah.
So you guys have the Shovel Nose Gold Project, 30 kilometers, I believe, from Merritt, BC. High level, tell us about the project. Tell us about Westhaven.
Yeah, so the project itself is, it really is unique. It's a big part of why I agreed to step into this role and to help move the project forward was its location and what the opportunity represents. Tied to working with a really experienced and dedicated group of professionals that can move it forward. So yeah, location, Southern British Columbia. For some of your viewers, and more relevant would be that the project is a 2.5 hour drive on a 4-lane paved highway from Vancouver, the Lower Mainland in British Columbia, and it has a major power line that connects the Lower Mainland of British Columbia with the interior, so the Okanagan area. Just clips the northern part of the property, so it has excellent infrastructure nearby, power infrastructure, transportation infrastructure, and it's what we call a low sulfidation epithermal gold deposit. It's high grade. It's an underground mining opportunity in an area that does have mining experience. So there's some really big mines nearby. The Tex Hyland Valley copper mine is not too far away. Head Bay and the Copper Mountain deposit isn't too far away. So it's a region that understands mining, has benefited from mining, and understands what those benefits can be. And what it hasn't had, recently would be the gold mining side. And we think it is in terms of its size, its cash flow potential with what's been defined by Westhaven so far, sort of a 10-year mine life, well, 56,000 ounces a year of gold production at a really modest capital cost to build it. That in itself is something that can be built. Plus, we think tremendous exploration upside. This is just a start. There are more ounces to be found here on the main Shovel Nose property, but then also we have 3 other exploration properties in the same belt of rocks that have the same characteristics, and we think are just as prospective to find additional deposits, just like what we have at Shovel Nose.
And just for our audience, I always find this interesting because I'm not a geo, but I think, okay, if I had a grassroots project and I wanted to do a boatload of drilling. I don't know if boatload's an appropriate word, but if I wanted to
It's a
do
good
a
one.
lot of drilling, how much would it cost me? And I look at this and all the work you guys have done. I see you guys have a market cap of give or take under $30 million, and there's 186,000 meters of historic drilling. There's quite a bit that's been de-risked here from a perspective of if we just want to think about it on the risk curve of good gold market. Lots has been de-risked. We have a sense of uh, how much cash flow this could generate on a discounted rate over, say, 11, 12 years. But that being said, I think that I look at the numbers and I go, okay, you guys are kind of at a bit of a junior mining crossroads here in a sense. 56,000 ounces a year you guys are talking about in the public markets. It's not necessarily super sexy for people that are kind of looking for those massive projects. I'm curious here, when you guys think about the plan to move it forward, is there an opportunity to move more ounces and expand on that?
Yeah, I mean, yes. So we're going through a process right now just to really get back to the technical basics on where are we going to find more ounces, because these sorts of systems tend to start small. You'll get these deposits or kind of shoots. We call it an epithermal system. I mean, I think this is you think of really hot sort of magmatic driven water that comes up in in an area. And a great sort of example would be if you think of Yellowstone, that is an epithermal system where these fluids come up and they boil, and you get things like Old Faithful breaching and boiling over. Sort of a couple hundred meters down below that is where the water starts to boil. And that's where, if there's gold in a system, that's where the gold gets deposited. It's a very well defined model. And you obviously get the mineralization happening where those fluids are localized, and you'll get these shoots. Our main shoot that we've discovered is called the South Zone. And then I think, as you mentioned, we have a couple of other smaller sort of satellite deposits. One we call FMN, one we call Franz. Those are more modest, sort of on 100,000 ounces each. But the South Zone is about 700,000 ounces of gold there. That's a big epithermal shoot. And if you have one big system where a lot of fluid is moved, there's going to be other areas. So we're really looking at how and where now do we look where there's space. We know, we can develop a model in terms of the geology and can get into, alteration and halos and so on, and pathfinder elements, the kind of things we look for that you'll see around these deposits. We know what that looks like. We have a fingerprint, so to speak, and we can now look for that elsewhere on the property and come up with these additional ounces. So that's sort of, when we look at what we're doing, we've got sort of two tracks. That's the exploration side and finding more ounces. Yes, because the market likes to look at things that are bigger. This is the start of something that could be bigger. We need to prove that that's the case. But even as it is, with the South Zone and Franz and FMN and the economic assessment that we've done, um, this is not a typical sort of Canadian gold story, where often the profile that people are looking for is saying, well, you need 100,000 ounces a year of annual production in order to make it worthwhile. That that sort of metric has developed over, the last 10 or 20 years for deposits in Canada, where there's a big capex number associated with building it, where often there, and the reason for that is because there's a big infrastructure project like road access or power that needs to be brought in to access the deposit. We don't have that issue. So our capital number in the economic assessment we did is under 200 million Canadian. So, call it's under 150 million dollars US to build an 11-year mine life producing 56,000 ounces a year that's going to produce between 80 and 100 million Canadian of after tax cash flow every year. Like that's significant, and that's meaningful, and it's that low initial capital cost to get into production that really makes this project stand out.
So, Ken, as you said earlier, you decided to hop on as CEO of this company. We're obviously in a good gold market. There's lots of opportunities for guys like yourself. It's something that I hear about all the time from uh, whether we want to say institutional investor types or people who kind of work in the capital markets that are looking to put deals together. They say that there's a real challenge right now finding quality people who want to step on as CEOs of junior companies. So I assume that before you did this, you had a few opportunities to get involved with various projects. Why is it that you decided that this is the project you kind of want to attach your livelihood to?
Well, I think, we've touched on sort of the 2 main components for me. One is the opportunity itself, what the project is, that it can be developed. A lot of work's been done here, a lot of really good work, so that it's really kinda set the table. It's in an area that I know well. I mean, I live in Vancouver, so I live in the Lower Mainland. I know British Columbia, so being close to home was good, but it's a project that can be built and on a reasonable time frame. And then the other equally important part for me was the people involved. I've worked with Ira on and off for the last 30 years. I've worked with both Zara and Robin before, and with them just joining the management team. I've worked with our operations manager who lives in Merritt. We work together with our data manager here in the office. It's a group of people that I know, and we've all kind of worked on different projects and different companies at different time frames in our careers, but we all sort of know and like and respect each other, and that's a really important part for any team to have that sort of coherence of purpose, and it immediately clears the decks of any of the personality things that can come up sometimes within teams. We just don't have those sorts of issues. So it's really those two parts. It's an excellent project that can be built with a really solid, experienced team to work with along that path.
All right. Well, Ken, thanks very much for hopping on here today. I think that this is one of those stories that I can see it now. We started out actually in cannabis, believe it or not. The deepdive.ca was
Oh,
kind of how
really?
we first
Yeah,
that's how we first bit
yeah.
our teeth into the equity industry. Back in those days, there was over 20,000 people in Facebook groups that were actively talking about the stock market, and now, if you go in those same Facebook groups, it's literally you see ads for counterfeit sunglasses. There's there's nobody there. But I often think about how there used to be this rabid fan base of retail investors that cared about the stock market in Canada, and I fully believe that we are going to come back to that. But instead of cannabis, this time it's going to be precious metals. And I think the projects like the one you have are going to be projects that are going to be on the radar of the butcher, the baker, the candlestick maker. So I really appreciate you hopping on here. And let's do this again when you guys got some more updates.
Absolutely, that'd be great. Thanks for that background. That's interesting. I think gold has got a lot more legs than cannabis does. It's been around for centuries, and it's not going anywhere as something to be looking at. So thanks for having me.
Thanks, Ken. All right, everybody. Thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody. Thanks for watching.